Test, 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 test. Test. Test, 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 test. Test. Test, 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 test. Hello, hello. Test. Test, 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 test. Hello, hello. We are live and recorded.
Everybody ready? Welcome to the July meeting of the Governance Committee of the Buffalo Fiscal Stability Authority. Our objective today is to review the various policies which govern the BFSA and to consider recommending approval of such policies by the full board. We will also receive the annual procurement report and the prompt payment report, and will consider recommendations that these two items also be approved by the full board. Our final item is to review the format of the annual board's self-evaluation and approve the submission of this item to each director to complete. First, let's call the roll. Executive Director Rowe.
Yes, Secretary Floss,
Here.
Director Keenan.
Here.
And Director Hobbs is excused. We have a quorum.
Thank you. The first item of business is to approve the minutes of the committee meeting held on December 3rd, 2025. The draft minutes are located under tab 1 in your board book. Is there a motion? Director King?
So made to approve.
Okay, I'll second it. Do you have any corrections?
I do not.
Okay, great. I'll call for a vote then. All those in favor say aye.
Aye.
Aye. Opposed? Okay, the minutes are approved. We will now advance the agenda to review the BFSA's various policies, procedures, and reports, and we'll consider recommending approval of these items to the full board. The relevant documents are located under tab 1 of your board book. Executive Director Rowe and Comptroller Waldron will review these items for us. Jeanette, you want to start?
Thank you. So we, as an organization, have spent a lot of time over the past number of years getting all of these policies consistent with the state's information that they put out. So our changes really are very minimal this year. The bylaws are the same, other than just changing the preferred spelling from the European version of bylaws to the American version of bylaws. The code of ethics is updated every year. The amount that is defined as a policymaker increases. This year it has increased to 124.39. So if an individual receives a salary above that amount, it is presumed that they're in a policy-making position. They're required to complete the financial disclosure form that's annually required. And that really summarizes the changes that were required this year. So you're asked to reaffirm the policies as they exist. Now there is an annual procurement report and prompt payment report that I'll have Claire review with you.
Okay. The report on procurement contracts, a New York State Public Authorities law, requires public authorities to annually prepare and approve a report on procurement contracts. New York State Public Authorities defines a procurement contract as a written agreement for the acquisition of goods or services of any kind in the actual or estimated amount of $5,000 or more. The following is a list of procurement contracts for $5,000 or more on a cash basis, which were effective during the year for June 30th, as of June 30th, 2026. Lumsden McCormick, they provide our accounting and auditing services, and we incurred $18,400 in expense with them. It has been extended for a one-year period to include the audit year ended June 30th, 2026. Ellicott Group, which is for our monthly lease of our office space. We expended $36,679, and that is a 5-year lease, which commenced in December of 2022. McGavran Grimm, which are provide our legal and general counsel services. We expended $10,830 with them. And then Wilmington Trust, which is our new custodian, and they manage the safekeeping of our assets. We're current contract status with them, and it is a $5,000 currently annual fee. Any questions on that report?
Just so you know, if you need to ask one question, feel free. If you have any. Yeah, okay, I just want to make sure. Okay.
Okay. And then we also are required to provide prompt payment report for the fiscal year. New York State Public Authorities law requires public authorities to annually prepare a report on the scope and implementation of its prompt payment policy. The report should include a listing of the types of categories of contracts the BFSA entered into during the fiscal year, whether these contracts are subject to the prompt payment policy, the number and amount of interest payments made for any contracts, the number of interest chargeable days, and the total number of days taken to process each late payment, along with a reason as to why the payment was late. The BFSA entered into 2 new contracts in excess of $5,000 this past fiscal year. One was Munson & McCormick, again, our accounting and auditing services. And the other was PFM Group, and they provide professional services as financial advisors. Their agreement is from October 1st of 25 to September 30th of 26. In relation to our compliance with our prompt payment policy, all of our invoices were processed timely and in compliance with the provisions of the prompt payment policy. Therefore, there were no interest payments required.
Thank you. Jeanette, do you have any comments on any?
I don't have any comments specifically on the reports, other than thanking the controller for promptness with transactions and reporting. I mean, there's a lot that comes in, so thank you.
Thank you. And I have a motion to accept all of the statements and reports.
Yes, I don't have a question to do that after.
Sure.
Okay. Motion to approve.
Second, okay, questions?
Yeah, just on the bylaws themselves. One place after another mentions the chairperson or the vice chairperson. Those jobs are vacant. What communication do we have with the governor's office, or should we have any? It seems like question number one, what problems does it present? In the sense that you constantly have to be changing your hat and going from secretary to chair. So question number one, problems, and then number two, is there anything we can do to encourage the governor to make those appointments either by resolution, informal communication, or any other means?
We've had conversations with the individual who represents the governor in the Western New York area that she has recently retired. So she was aware that the formal chair and vice chair hasn't been named yet, but they were comfortable having Secretary Flock step up into that role while they were looking at that. But as to where it's gone, I haven't had a conversation on that for a couple of months, probably. Typically for appointments, it is picking up the phone and having a conversation. We've never done anything formal through resolution. I would suggest probably, since she makes the appointments, it would make more sense to have a conversation as opposed to a formal written resolution. Would be my strategic thought on it.
My first question with regards to, does it present any problems?
It could. It has not, but could it? It
Yeah.
could. Absolutely.
Obviously, having 2 more board members would make it easier to make sure we had quorum and make sure that we could vote on items and things like that, just because things come up. So yeah, I think it's important to have all of the positions filled.
And as you said, with the local representative of the governor's office having retired, we may have less contact with the office than we previously did, so they may not be aware of problems like having vacant positions, both in the titles and the actual vacancies in the board. Does it make any sense to sometimes formal request to fill the position? Just so they would be able to act more efficiently.
Sure. I think I personally think having conversations probably serves a better role as opposed to something formal.
Would it,
We don't want to,
would it be helpful if then we just by resolution requesting that you have a conversation?
that would be fine.
How do other members feel?
And these positions are often the top priority, so I think it's certainly as a board to show the commitment to filling positions.
Yeah, I certainly am not trying to tell the governor what to do, but to bring it to the attention of whoever is the question.
Should we wait until the governor fills position though before we go ask, so we could ask the new person, whenever that person is appointed, you know, that we can introduce it, have that conversation.
So now we're asked to do that check form.
What was that?
Now we're asked to do that gigantic background check form too,
Yeah.
which is that dissuading people left and right.
Purely from a governance perspective, it's not a problem. I mean, you can have, it'd be nice to have a full complement of directors, but having Secretary of Laws act as an acting chair is not a problem from a governance perspective. So that doesn't create any issues.
Other than maybe just manually, is it repetitive? And
Yeah.
You have to keep saying, you know,
Acting
acting
chair.
as, yeah.
It's just, I mean, if you want to make a motion, I'm more than happy to accept it. However you want to make it, whether you want to make it just to do it now or wait until someone's in the position to actually talk to, is up to you, but
Yeah,
what you'd like to do.
I don't see a need to wait, so yeah, I guess I would make a motion that the board ask the executive director to communicate with the governor's office with regards to filling the vacant positions on the board and naming the chair and co-chair.
Do you want that a recommendation to go to the full board, or do you want that just to come?
On the committee to,
So that it's so the motion is a recommendation to ask the full board. Fine. Okay, good. I'll second that. Any further discussion? Anyone? Seeing none, we can vote on the motion. All those in favor say aye. Aye. Opposed? Motion passes. So we will recommend to the full board that we recommend to the governor that we have a full.
Fill the remaining.
Yes.
Understood. And also on ordinance to the.
Right. So now can I have a motion to accept all of the policies and the reports? So made. Okay, second. Any other further discussion on any of those? Seeing none, all those in favor say aye.
Aye.
Aye. Opposed? Okay, so we will pass that, and we will take care of that at the full board meeting in one resolution for all of them. Okay. Our next item of business is to review the annual board self-evaluation and recommended submission to each director for completion. A copy of the policy guidelines from the authority's budget office has been included in tab 1. The format is consistent with what we've used at BFSA over the last several years and is in the format provided by the ABO. May I have a motion to approve the distribution of the annual Board of Directors evaluation to each director for completion? So made. Okay, second. Okay, is there any discussion? No. Seeing none, all those in favor say aye.
Aye.
Aye. Opposed? All right, we will do that then. The motion passes. Is there any other new business before the committee? Seeing none, this concludes the meeting of the Governance Committee of the Buffalo Fiscal Stability Authority. Is there a motion to adjourn?
Well made.
Thank you. Second, we are adjourned. Good job.
We are now online. Thank you.
Okay. Thank you, everybody. Welcome to the July meeting of the Buffalo Fiscal Stability Authority, and thank you all for being here. Earlier today, the Governance Committee met and recommended the full board approve various BFSA policies, procedures, and reports. These items will be brought for a vote today. A revised meeting agenda has been provided to you today in your folder with those additional documents for today's meeting. Within the folder are two additional items to be brought to your attention. First is the annual board self-evaluation, which is required to be conducted annually. An evaluation form has been provided to you along with an envelope for mailing and documentation. The evaluation procedure is confidential and responses will be compiled at the next governance committee meeting. So please don't sign them. As we go through all of that. Additionally, the annual statement of compliance with our code of ethics has been provided with a separate envelope. The full code of ethics has been provided under tab 1 of your board book. Please mail these items separately to maintain confidentiality from the self-evaluation. And you are to sign the one that says that you actually read our code of ethics. As is customary, we will open the meeting to public comment or any matter discussed today at the conclusion of the meeting. We will begin today's meeting with Executive Rowe taking the roll call. Executive Rowe?
Thank you. Director Fishkin?
Here.
Secretary Claus?
Here.
Director Hoves is excused. Director Keenan?
Here.
Director San Filippo is excused. Mayor Ryan?
Here.
And County Executive Mark
Here.
Holmes. We have a quorum.
Thank you. Our first item of business is to approve the minutes from the meeting held on May 5th, 2026. Directors will find a draft of those minutes and the accompanying draft resolution in your board book under tab 2. Can I have a motion to approve the minutes?
So
Moved. Second. Okay. Is there any discussion on the minutes? Any corrections, changes? Hearing.
Correction to one.
Okay, go ahead.
On page 11, the bottom, states that Director Keenan requested a break-even analysis of overtime usage as compared to hiring additional police officers and fire departments. We received that analysis.
No, probably not twice the first tasks, but we're, yeah, it's gonna be very slow on the hiring. So,
So they're still working on it.
just working on it. It's become, I'm happy to talk about it, but essentially, the city in 2019, like every other municipality, have opted into a transferability study under the state civil service to verify that all police officers do work similar to other police officers, say Rochester or Syracuse, therefore allowing us to use the state civil service test, which is free and occurs twice a year when we have it. You can also call it yourself. They never did that. So now we have to pay for it from the company that we're taking the business from. So we actually pay IO Solutions to prove that we can use a free test, and not pay them hundreds of thousands of dollars to administer our special test. So that has a little bit of a bump in it. But that means basically with the time it's going to take to get that done, they're thinking it'll be hard to get us in line to advertise, to have people sit for the October New York State test. This is for cops. Now I have one loophole, which is apparently due to this emergency condition that we can fire off the Erie County police list. They are offering the test in October. So it'll be a fairly large pool of people. We could hire off that list with the standard contingency that they move into the city of Buffalo 6 months of their employment. So that might save me a little bit. It will also allow us to take transfers in cops, but I am very worried about police headcount. Because if we're only gonna, let's say I can't sit and test until April 27, then to get stuff scored 4 or 5 months, right? Then academy, 12 weeks, field training, right? We're not getting fresh bodies out on the streets for a very long time. And by that time, probably, we're like 40 plus retirements here, but the trend recently, right? Yeah. So I'm gonna, these two loopholes are gonna be key for me. Fire, we can still work out a little bit less on the test with, do the exact same thing with fire, that transportability study. So.
I appreciate that update, the analysis we're looking for, I guess, for just how many filled police officers compared to.
You say on the OT front, right?
Yeah, like how many, you know,
I'm sure we can figure out something there. But as an overall trend, though, we're seeing a broader issue with younger officers they don't love the overtime like past generations did. They hate it. So a ton of overtime before police is becoming forced. And that's a morale killer. And in a job when you can retire after 20 years with healthcare, you know, of course you're bumped out right at 20 or even earlier, right? So
so in the current budget where you jacked up the overtime appropriation.
Yeah.
Appropriately to match historical.
trends, yeah.
You also put in a big vacancy number in the jobs. So if you filled those jobs, I guess technically you wouldn't have the money for the jobs because it's all in overtime, right?
Well, so we in the stats we had it at, you know, our hope was to get, you know, with the October class, not fully understand all the complexities in New York State civil service there.
Yeah.
So our hope was to get headcount back up to 801.
And there would be enough money in the budget to fill those jobs, which
Right.
presumably
It'll
cut
end
down
up being a
the
shift,
overtime
right?
expense.
So we'll have more vacancy savings that get shifted over to OT.
All right, thank you.
Alrighty. Any other questions? Seeing none, all those in favor of approving the minutes, say aye.
Aye.
Aye. Opposed? Okay, the minutes are approved. We have a resolution before us today honoring the many contributions of Principal Analyst Bryce Link to our organization, which I would like to read now. Okay. Sorry, Bryce, in advance. Whereas on July 3rd, 2003, the New York State Governor signed into law Chapter 122 of the laws of 2003, known as the Buffalo Fiscal Stability Authority Act, which created the Buffalo Fiscal Stability Authority to assist in the restoration of financial stability in the city of Buffalo and within its covered organizations. And whereas Bryce Link was hired by the Buffalo Fiscal Stability Authority on January 22nd, 2007, and whereas Mr. Link was promoted to principal analyst in January 2011, and during his tenure has held various positions and roles, including analyst over the city of Buffalo, the Buffalo City School District, and the Buffalo Urban Renewal Agency, and additionally served as a media contact, treasurer, and internal controls officer. And whereas Mr. Link consistently performed his duties with distinction, having conducted the financial analysis of 20 annual budgets and financial plans covering the city and covered organizations, reviewed countless revisions of such financial plans, and reviewed quarterly reports for those organizations he covered, providing the information necessary to the BFSA Board of Directors and Executive Director to assist in leading their actions through such careful and thorough analysis. And whereas Mr. Link worked through challenging fiscal times, including the period when the BFSA was operating in control status through the COVID-19 pandemic and through other fiscally challenging times, including those facing the city of Buffalo over the last several years. And whereas Mr. Link's dedicated substantial hours during the budget season to ensure BFSA's Board of Directors was able to effectively meet its obligations to meet and review the budget and financial plans within 20 days after submission. And whereas Mr. Link has tirelessly been working to promote the mission of the BFSA to help restore long-term fiscal stability to the city of Buffalo and its covered organizations through the countless contributions he's made. And whereas Mr. Link has accepted the position of City of Buffalo Commissioner of Administration, Finance, Policy, and Urban Affairs, providing him the opportunity to continue and expand his work with the City of Buffalo. And whereas Mr. Link's contributions and sacrifices to BFSA and to the community will endure well past his active service with the BFSA. And whereas the Board of Directors wish to formally recognize and express their sincere gratitude for his outstanding contributions and the impact his work has made. Therefore, be it resolved that the BFSA does hereby honor and appreciate Bryce E. Link for his outstanding contributions to the Buffalo Fiscal Stability Authority, to the City of Buffalo and the residents of Buffalo and the Western New York community. This resolution shall take effect immediately, approved July 29th, 2026. Thank you. We appreciate everything you've done. So, of course, you still got to continue today, but let's leave it. Move to approve the resolution. Second?
Second.
Okay. All those in favor say aye.
Aye.
Okay, it's unanimously approved. Again, thank you, Bryce, for all your hard work. We really appreciate that. Jeanette?
I was gonna say, could I awkwardly add a few comments? Sorry to put you through this, Bryce, but you were a member of the BFSA staff when I was brought in, and I was fortunate enough to keep you on my staff. You were a key person in helping me with the transition from, I went from private, I went into public sector, and then over the year, you helped me through every step of that transition. I am very grateful to you for helping me with that transition. His technical abilities, poise, and steady nature were clearly evident right from the very beginning. I realized how much of an asset he was to the organization. Promoting him to principal analyst was one of the easiest decisions I made in this role. He was relatively new, still in terms of experience, but he picked up the role effectively and quickly. Few fun anecdotes, and there's many. Back in the early years when we were in a control period and things were contentious, Bryce used to be a bouncer at a bar in college, and he would basically bounce the meetings for us, and he would protect everybody. So that was always helpful. And there's one insect that really can kind of make me cry. It's called a silverfish. And yeah, they're terrible. They're creepy crawly things. And I remember running into his office one day in the old office and just almost in tears, Bryce, can you please kill this insect for me? And he not only killed that, but he's been on the hunt for silverfish ever since. So I don't know what I'm going to do without you. But all of this kind of talks about Bryce's character. He's consistently treated colleagues and city staff with the utmost respect. His humor, resolve through difficult times, technical skills, and hard work ethic have all contributed to your success. I know it's a lot for you, so I know the center of attention isn't your thing, so I'm gonna stop right here, but please know that we will all miss you very much, and we wish you the absolute best in your new chapter. Thank you.
Thank you.
Thank you. And it's good to know you're not going too far, and we expect to see you often. So,
If I could.
yes, go ahead.
I want to thank Bryce. Like Jeanette said, he definitely, if anybody that knows the numbers in the city of Buffalo, is Bryce, the data, his analysis, his questions, repeated. There's no sending the email thinking you're done with Bryce, because he will send another question. So I do think the Ryan's administration made a great choice in bringing him on, somebody with experience that really know the numbers, not a political person. He knows the data. I don't think there's nothing can be done. He's aware of our fiscal challenges. He's done numerous reports with this group that tie into a lot that we do. So we do look forward to working with Bryce and some position. Congratulations.
Thank you. Yeah. Nice.
I guess, can I
Yes,
say
go ahead.
something?
Yes.
Hi, Tracy Cooley, Director of Finance, Buffalo Urban Renewal Agency. I can't say enough about Bryce. He's been an amazing partner since I started about 12 years ago. And we just help each other a lot, very supportive of each other, and I can't wait to work with you at a hopefully level. So congratulations.
Thank you, Tracy. Anyone else? Good. Thanks again, Bryce. We'll continue to embarrass you, don't worry. We'll now move on to BFSA business. We will consider a resolution to affirm the review of the proposed City of Buffalo bond sales as conducted on July 7th. This resolution summarizes the items reviewed and discussed that day. A draft of this resolution has been provided under tab 3 of your board books. May I have a motion to approve this item? Second. Okay. Discussion? Go ahead.
I guess since I requested this resolution be put before the board, like to explain why. So at our last meeting, when we did review the bond resolution, the approving motion at the end of the meeting was to approve the analysis that had been prepared by staff. And it was an excellent analysis, but basically I felt that it was a recitation of the facts of what was going on, and included in there was a comparison of whether the city issued the bonds or whether the control board issued the bonds. We had a lot of information about bonds that have been authorized but not issued yet, bonds that have been issued but not spent. So it was all good information, but my feeling was we probably should have received and filed that report and then had a resolution of what we wanted to do as a result of that report. So what this resolution does is basically three things, and that is that it asks that going forward, we do everything we can to save the money that could be saved by bonds being issued through the control board rather than the city. The analysis that I referenced earlier said that for the year, it was over $200,000, but for the time since board is the control board has stopped issuing the bonds and the city is gone, we could have saved over $3 million. So, the first resolution is let's do everything we can to save that money when we can. The second was we talked a lot about having unspent bond funds and unissued authorized bond funds and unauthorized budgeted bond funds, and it totals up to over $100 million. So this resolution asks them for a report from the city administration and controller's office with details on what the plans are going forward with all of those dollar amounts, so that we know how much we need to budget in the future for debt service costs for all of those things. And then the third item was that we've been talking for quite a while about the court case, the dispute between the city and the controller, and how much should be issued. And we've said in the past, well, we hope they work that out. Now with the resolution, we're asking for specifically a meeting between the administration, the controller's office, and staff of BFSA to discuss that, because no matter what the court says, whether you have to or you can issue those bonds, we want to do the thing that's most fiscally prudent for the city. And so rather than say we hope it gets worked out, let's have a resolution and within 60 days have a meeting to discuss it and then report back. So I just want to give a little meaning to why the resolution is before us.
Any comments? Any other comments?
An overview of those issues.
Yeah. And we did spend a lot of time discussing all of these issues at the last meeting. So We don't necessarily need to revisit all of them. So if there are no more discussion, all those in favor say aye. Aye. Opposed? Abstentions? Okay, the motion passes. The next item of business is to consider a draft resolution regarding required submission of information to the BFSA by the city and covered organizations. This resolution reaffirms the document titled Items to be Provided to BFSA by the city and covered organizations. It also states that the city and covered organizations are required to submit all proposed labor agreements, including memorandums of agreement and memorandums of understanding, to the BFSA for review and comment before such agreements are entered into. A copy of this proposed resolution was emailed to you yesterday, and a hard copy has been provided with you today in your folder. May I have a motion to approve this resolution? So moved. Second? Second. Okay, is there any discussion? Director Rowe, do you have anything you want to add?
I just thought this was a good timing and good opportunity to solidify the board's clarification about memorandums of agreement and memorandums of understanding that it came up as an issue back in December of 2025. And also with all the negotiations coming up with covered organizations as a whole, just to go on further record. We're already on record, but this is again to reiterate it. So thank you for considering this.
Thank you. And I don't think this is anything out of the ordinary. This has been something that I think the act has said that we have to do anyway. So
Yeah, I think it'd be a good time to have both the city and the school board though, since there are so many unsettled contracts, when we might expect to start seeing any proposed agreements with either.
I mean, pretty fast. We're kind of starting with fire right now, but that's no secret, but I don't want to, negotiate in public. So we're trying to move expeditiously. Yeah.
264 you have. You'll be getting our proposal, a proposal to pick up 550 admin clerical workers, probably in 2 weeks. The BTF and the BCSA. We've spoken to both unions about entering short-term agreements rather than full-blown negotiations. Both have been, the BTF has been receptive. BCSA, I'm not sure yet. So as soon as we get an update, like that's how we're gonna proceed, and here are some proposed numbers we might propose, we'll be sending that for your review.
okay. Thank you. Any other questions? If not, we'll move to a vote. All those in favor of the resolution say aye. Aye. Opposed? Abstentions? The motion passes. The next item is a brief organizational overview to be provided by Executive Director Rowe.
Thank you. Oh, never mind, you're ahead of me. Thank you. So while we're looking at all the annual policy procedures and reaffirming those, I thought it made a lot of sense just to go through a quick organizational overview with the director. So we have two standing committees, the Audit, Finance, and Budget Committee and the Governance Committee.
Maybe too far. I got it.
Thank you. So it is the responsibility of the Audit, Finance, and Budget Committee to assist the directors in fulfilling their responsibilities as it relates to authority budgets, financial operations and controls, accounting policies and reporting practices, and sufficiency of audit procedures. This is largely done through the review of annual budgets and financial plan and meeting with our external auditors, where this committee receives their reports, including the annual financial statements, management letter, and the required audit communications to the audit committee. It is chaired by Secretary Floss, and Director Keenan and Director Sanfilippo are members of that committee. But it's been a longstanding practice, and it continues, that all directors are invited to attend any of the committee meetings. We generally convene 2 to 3, 4 times a year. As you know, I try and arrange those meetings so they're scheduled right before a full board meeting. And there's a list of meeting agendas. The other items that I didn't touch on before was the internal audit review, which has been conducted by Bryce in the past as the internal control officer. I'm not going to answer anything. As far as governance, I went too far. Thank you. The governance committee is responsible for keeping the board informed of the current best governance practices, reviewing corporate governance trends, and reviewing and updating the authority's corporate governance principles. It is also chaired by Secretary Floss, with Director Hodes and Director Keenan as the other members of the committee. We generally convene 3 times a year. Meeting agendas include reviewing, affirming or reaffirming, and or modifying existing operational policies. As a matter of practice, I review the ABO website monthly just to see if there's a new policy that's come down from them that we need to consider. Implementation, recommendation of new policies would be part of this governance committee's role, and the annual board of directors self-evaluation is conducted by this committee. The organizational chart, as it exists now, it will be changing. I have a vacant administrative assistant position. We did just have an individual accept that, an offer on that position this last Monday, so that will be filled soon. So we're happy to have somebody join our team. And then just what I did here, and thanks Bryce, and Nathan's not here, but Nathan as well, to update. One of the key things, our role and your role as a director, is to keep track of labor contracts. Anything in red is overdue, expired. All city labor contracts are expired. On this sheet chart would be the number of employees by union and when their collective bargaining agreement expired. Police and fire, obviously the 2 biggest unions, they both expired June 30th, 2025. Some of the smaller ones right there. And then for the school district, there are some current contracts, teacher aides and assistants, substitutes, bus aides, food service workers, summer food service. They are all current with the dates that are provided on this chart, but significantly, as was discussed, blue collar, white collar, teachers and administrators are all up. BMHA, they negotiate their individual union contracts collectively. Those contracts all expire in 2028. At least that's how they've done it in the past, collectively bargaining together. And Bureau's contract just expired June 30th, 2026. So that one is outstanding officially now as well. Just a high level overview on that.
I think it's important to note with the contract negotiations that under the Taylor Law and the Triborough amendments that contracts continue to go in force, maybe unlike some other states, and that only those things that expire, like wage increases, change. So health benefits and other benefits will continue and the workforce will continue. And therefore, under the Taylor Law, no public employee is allowed to strike. And if they do strike, that there's a penalty of 2 days pay for every day that they're striking. So that, I mean, our expectations, I would expect, is that things are going to go along as they have as we negotiate, even though we're without contracts. And I think that's an important thing to just know, so that people understand, particularly in the community, how our workforce continues to provide services for everyone. So, any other questions for Jeanette? Our next item of business is to affirm the recommendations of the governance committee to approve the policies of the BFSA, along with the annual procurement report and the annual prompt payment report. These items are provided to you under tab 1 of your board book. I would like to take them all as one action, if that's okay. The draft resolutions are provided under tab 3 of your board book. Do I have a motion to approve the resolutions addressing all of these items as well? So, a second. Okay. Is there any discussion? I think we had a discussion at the committee meeting. All those in favor, say aye.
Aye.
Opposed? The motion passes. We'll now move on to city business. Our next item is to review.
Governance committee. In the staff that we gave the governor's office.
Oh.
Issues.
Yes, the government's commission has a second resolution that they're recommending to the board, which is to communicate with the governor's representatives about filling the chair and vice chair's positions when the new governor's representative in Western New York is appointed. Is there a motion to approve the committee's resolution? Yes. Second. Okay. Is there any discussion on that? Seeing none, all those in favor say aye. Aye. Opposed? Okay, that motion passes. Thank you very much for reminding me.
Thank you.
Okay. Now we'll move on to city business. Our next item to review is the revised financial plan and the financial gap closing plan as submitted to the BFSA on July 17th. A copy of the BFSA report and the submission to the city administration or by the city administration is included under tab 4 of your book. In order to ensure independence is maintained, Jeanette will be reviewing this item instead of Bryce. You got out of one, Bryce. That.
Thank you very much. Okay, so back at our June board meeting, we reviewed the adopted budget and the changes from the recommended budget to the adopted budget. And at that time, we recognized that there were some changes that were made in the final budget that would flow forward, and therefore a revised financial plan was required. So this revised financial plan was submitted to BFSA on July 21st. The financial plan reflects the revenue and the expenditure changes that were made in the adopted budget. The revenue actions include the reduction of the tax levy and the increase to the estimated sales tax, and the projections thereafter. Expenditure actions include adjustments in the overall decrease in public works spending, and a slight decrease in the mayor and executive department, community services, and the estimated out-year surpluses are also changed due to all these changes with the revenues and the expenditures. The revised financial plan also reflects known changes subsequent to the budget adoption, and those really are zeroed in on the parking ramp transaction. So the sale of the parking ramp came in at a higher selling price than what was originally estimated, and those increases are reflected in the plan. That's offset by a decrease in the annual transfer in from the parking authority, which is no longer allowed. And that's furthermore offset by services that the parking authority is going to reimburse the city of Buffalo for. So then the net effect of that has been brought to the financial plan. With respect to the real property tax levy, that has decreased from a proposed 25% increase to a 19% increase in the adopted budget. The change is a combination of two things. The original recommended budget included out-year increases of 9% in year 2, 5% in year 3, 5% in year 3. That changed to 10% in year 2, 6% in year 3, and stayed with the 5% in year 4. So that's reflected in here, and the compounding effect of reducing the tax levy in year 1 is reflected in these numbers as well. So the net effect of those two transactions, so to speak, is 37.2 million reduced revenue over the revised financial plan. Then we have some positives in revenues for sales tax and transfers in. The sales tax revenue was increased in 26-27 to bring the number up to where we're seeing sales tax now, plus an estimated about 2.5–3% increase over that. That carries forward over the financial plan with a 5%, 4%, 3% increase in years 2, 3, and 4. The parking authority increase is reflected on here as well. That is a known number. The transaction has sold. It's reflected in the financial plan, but it is non-recurring after 2027-28. And the parking enterprise fund, that represents the transfer that they originally were anticipating 2.5 million annually of excess, 2 million of excess revenue would be transferred from the parking authority into the general fund, but that is no longer permitted. So that has been reversed and netted out against the reimbursement for services of 250,000. In total, over the financial plan, the combination of these 4 items decreases revenue 30 million. This chart represents the final financial plan based on the adopted budget and reiterates the revenue changes that have been discussed. With respect to expenditure changes that impact the out years of the financial plan, there's a pretty substantial reduction to budgeted expenditures for public works of 6.3 million in the budget year. That carries forward annually over the financial plan. And then smaller changes included the reduction to the mayor and executive department and increase to the community services department. There is it's referred to as a transfer to fund balance in the budget, but it reflects the surplus revenues over expenditures. That number is adjusted to 4.8 million in the out years. And this chart demonstrates what that looks like going forward based on the inflationary factors that were built into the financial plan of 2% for departmental spending, with the offset to the surplus on the very last item. The expenditures decreased between 6.1 million and 6.5 million annually, and with the impact for the reduction of surpluses increases to 9 million over the financial plan. The final, I guess.
We asked, Ben, can you talk about the reductions to the public works in particular, with the idea, whether it be, automobiles or repairs, what the impact's going to be going forward by not being able to do the kinds of repairs and the costs that we're foregoing?
So capital outlay, the bulk of that was $1.6 million to pay National Grid to expedite the LED conversion, which is cost savings. We would still like to pursue that as part of a secondary borrowing, either for you folks or the city, this fall, along with the other emergency items that Senior Deputy Commissioner Crone has identified that are life safety capital items, as well as planning for other critical needs. So that was the bulk of that one there. There were some smaller projects that we, again, could arguably bond for. Mainly, I believe it was the 20th floor has a building envelope issue with windows and some ceiling, things like that. So they could argue a capital project. Moving vehicles, this was mainly a mixture of plow trucks and packers. We kept it enough to put in our order for all of the plow trucks that DPW estimates they'll need, because I did not want to lose out on possible delivery time to get them at some point this winter. But we did cut back on the packers, the garbage trucks that were in there. Those will have to get moved over into a future bonding issuance.
Thank you.
Go ahead.
Guess I don't understand why you would bond out the LED lighting, because it doesn't have like a 1-year payback.
Yeah, so we were negotiating with the council, right? The council wanted to see reductions, and they were very, very vocal about they did not like items that were in the budget that could arguably be capital expenditures. And so as part of negotiations, I mean, look, I agree, Tom, right? But it's negotiation. That was clearly an area of council concern. So that's what we went for.
What do you think will be the lifespan of that bond?
Geez, they're good for a long time, but the city's policy is a 10-year payback on everything. So
So you're paying back 10 years, something that you're getting back 1 year out.
I mean, they might go shorter even than that. So, but
EPU might be short.
Yeah.
A lot of technology, I don't know if light bulbs are considered technology in that, is usually 5 to 6 years.
the value wants to last.
But potentially, yeah. Yeah, that's why I don't know exactly. That's the best.
That seems like a really bad idea.
But the city payback is based on the PPP.
Right, but you're, the policy is you don't like to issue bonds beyond 10 years, right? The goal is to.
No, I don't think so. I mean, that's, we do a weighted average to determine what the life of the bonds are, right? Historically, it's been 11, 12, or 13 years on city issuances.
Actually, I have a slide on that later for the debt study, but the policy, I took this from your policy, or from your August 1st letter, is that the city shall maintain its practice of rapidly amortizing principal of its long-term obligations by utilizing either a weighted average maturity or a school structure as permitted under New York State local finance law. That's the goal of the city, to have at least 80% of its GO debt prepaid within 10 years. In addition, the city expects to have a final maturity of no more than 25 years. So there is some rapid repayment provisions, which is why you saw the big drop off in 10 years. Yeah.
Can you?
Sure.
Go for it. I had just one question on real property tax, and obviously in the out years of the new plan, there are some expectations of surpluses. So maybe this is the reason for it, but it was my understanding through some of the conversations here that after the property tax rate was reduced for 26, 27, the expectation was for 27, 28 to make up the difference, and that doesn't seem to be the case in this revised plan.
It's partially made up for it. The main thing that makes up the difference is, I think it was a few slides further on, is the point of the budget process, the verbal commitment that
Gotcha.
base aim would go up by 40 million.
That's right. So
Right.
that's the assumption is
Yes, right.
you didn't go all the way based on your original property tax revenue projections because of new information about some of these other theoretically recurring revenues.
But as we know, there could be other factors that mitigate, they can change things, right? So a key part of the 4-year plan for us is certain kinds of healthcare savings. I actually feel pretty reasonable we'll be able to achieve the retiree savings.
Mhm.
You know, if we just get 20% of our retirees to shift over to a Medicare Part B plan, and I think BPS had a lot of success working with Lolly to get retirees to do that. I actually believe that's plausible. my savings on actives are probably a little aggressive, but we'll see how things pan out there. So it's, it's a balancing act.
Okay, good.
In summary, the revised financial plan is consistent with the adopted budget. It reflects the compounding effect of reducing the real property tax and the increased sales tax, and expenditures were appropriately adjusted over the out years, reflecting those actions that were taken in the adopted budget. The real property tax levy again is proposed to increase 10, 6, and 5 over the out years. BFSA will closely monitor the budget against actual results. And just as a follow-up to our June report, there was a note that the budget may require modification for parking revenue. That's the annual transfer. If it was determined that the amount can't be substantially offset by reimbursable expenditures, I tend to think the amount's relatively small enough where it'll be absorbed into the existing budget. We won't need a budget modification, but it's just something to mention.
Yeah, and we know for a fact, in order to maintain our debt coverage ratio as required by the indenture, we're gonna have a fairly low reimbursement number for the first year. That will be able to bump it up in the out years a little bit, but that first year is tight.
Okay.
Or increase their budget last minute, and so they get left us very little wiggle room to hit the debt coverage ratio.
Okay.
Yeah.
Now moving on to the gap closing plan. This was also submitted on July 21st, 2026. The BFSA had previously identified 175 million of uncertain revenues and cost savings over the 3 out years of the financial plan. I've got a slide that'll review those coming up. The gap closing plan, we had gone back and requested a gap closing plan to address what if these amounts don't materialize, these savings. And that was provided to us. So just as a kind of a reminder, the unsupported revenue requiring state action included state temporary aim. There's 5 million included each year over the financial plan. That is not included in the state's executive financial plan. The vacant property surcharge is a new untested revenue. We included that amount in our schedule. The uncertain revenues, cost savings, prior year collection of real property taxes is 1.5 million annually, is above and beyond the tax, the real property tax levy. And we know property tax collections are always cyclical. We're collecting on some older ones. So we put that in as a potential uncertain revenue because there's just been so many years where that has not happened. In fact, once in the last 10 years, has there been excess property tax collections above the tax levy. Casino revenue, there's a one-time retro payment reported in 27-28. That BFSA has taken the position. We don't believe that is collectible, but it could be. And then health insurance savings that Ben alluded to before for negotiations. That's just a reminder of where we were.
Those are some big numbers. 175 million over 3 years, 65 more that are being questioned, I guess. That's why you're providing a gap closing plan to address them. Can you share with us your thoughts on how much of that is stuff that you're really worried about and how much you feel you shouldn't be questioning them because you think they're good numbers?
Yeah, that's fair. I mean, the state aim, in terms of state aim, I feel very good about. I mean, up to agree that as actually well above that figure, we think, based on conversations coming out of Albany with the last budget in particular from Speaker Heastie, feeling very passionately about this. Vacant property surcharge was almost included in the final budget bill. There was broad upstate support for this in the delegations, but got pulled out last minute. But our Albany liaison thinks there's still a good chance for that to make it in again. So I'd say 70-30 on that, making it through next fiscal year. The prior collections, that's based on, it's been 2019 since there's been any in-run action whatsoever. We're going to have Post reduction is on August 28th. We're gonna have a ton of folks after that date that wind up in payment plans on prior stuff, either informal payment plans or with city court. So I do expect we're gonna have a pretty decent chunk of folks that are doing prior makeup on that front too. Casino revenue, that's, a bit of a shot there, it's probably my worst one. And like I said, health insurance, mixed bag there. I feel like I do feel good. The more I talk to Lawley, I feel pretty confident that we can actually achieve the retiree savings. And then active duty, it will be a little more of a big mixed bag, but we have very good conversations with Labor Management Healthcare Fund. I think we will be able to get step-by-step all our bargaining units into LMHF. That's going to, at a minimum, dramatic control healthcare cost growth. And if they agree to some of the compromises we're looking at, basically for right now, most of our bargaining units are above a platinum plan. They're above a platinum plan by like 5 or 6%. So just taking folks down to like a platinum plan, like the best health insurance in the country, right? We'll still see some very decent savings. And a lot of that can be actually, we can move to a lesser monthly contribution for the employee that just has higher copays in some areas, and that can see very large savings for us. So there's a lot to play around with there.
So if you had to put these numbers in what you felt confident in, 65, almost $66 million in 27, 28. From what you said, it sounds like that would be considerably lower, so less of a gap to close.
Yeah, and also the casino revenue, that was mostly going into basically unassigned fund balance, right? That was the main driver of us having any kind of like decent surplus over the 4-year plan.
Right, yeah.
So if that rolls away, I think our ability to break even between these items here that are some of which are questionable, plus the new baseline aim level, as well as our willingness to go above the previously announced levy increases in the out years. And then obviously we want to get unassigned fund balance up more expeditiously, but if we can't, we can't. So.
Well, and I think it's important when we talk about a gap closing plan that we're looking at a worst case scenario, saying we want to plan now,
right,
in case things happen, so that we're not making decisions off the top of our head when everything's collapsing around us. So I think the reason we push for this and push for it hard is so that we are in the relative calm of the summer being able to talk about these things in a reasonable way and go through them. And I appreciate your questions because I think that helps us put everything together. So
Thank you.
I guess we kind of just heard the city side of it. Can we still ask Bryce questions?
Or Jeanette.
Jeanette, yeah,
Yes,
Jeanette,
Jeanette.
you put these numbers together. Yeah, I guess hearing those responses from the city, do we feel, yeah, it is reasonable and maybe problem might not be as large as the 65 and the 175 over the 3 years based on those responses?
I think it's important to recognize that this schedule that we put together is a worst case scenario. It is appropriately planning for it, like Secretary Floss mentioned. Do I think all of this is going to come to fruition? No. Do I think some of it will? Yes, but I think part of the whole financial plan process is to provide time to figure out how to budget appropriately as things move forward. I think on this next chart here, I am very comfortable with what they've provided to fill that gap in the event that all of it were to hit. In worst case scenario, all of it was to hit. The state temporary aid, I just want to make sure I clarify that that's not AIM being aid and incentives to municipality, but it's aid of 40 million that has been reflected in the state's financial plan for years 27, 28, and 28, 29. It falls off in 29, 30.
The 40 million?
The 40 million. Yep.
So I'm using AIM as a catch-all term.
Yeah, that's okay.
Yeah, they're different term for it.
Yeah, it moves all over. It was kind of hard to find it.
Whatever they were trying to marry it.
Yeah, it's state aid. It's the same thing.
Well, you gotta sign a little letter.
True. And then the fund balance, the surplus will naturally offset. Worst case scenario, there is no surplus, as Director Swanikamp mentioned. The fill is tax levy. So if state aid at 40 million did not come in, the backfill is additional taxes or reduced expenses. But I mean, the plan says additional tax levy. So what does that mean to the tax levy? Because those are large numbers.
So 70% over the 3 years.
Yeah, worst case. This is worst case. Everything hits at once. So right now we're at 19% this year, 10, 6, and 5 is what's included in the financial plan. If everything hits and the city continues to receive 40 million in state aid that has been discussed, then the real property tax increase goes up to 12.8% next year, year 3, 8.6%, year 4, 10.6%. Worst case scenario, 40 million doesn't come through and all of these hit, then you're looking at really significant increases, 31% in year 2, 21.3% in year 3, 19.7% in year 4. Obviously, then there's a different discussion. There's the ability to increase taxes, then there's the willingness to increase taxes, and that becomes another conversation. But just from the pure math, there is capacity within the taxing margin to tax out your way out of this, if it was necessary.
That involves 70+% tax increase for 3 years. Doesn't seem like a balanced gap closing plan to me, in the sense that it's a very high property tax increase. You know, the likelihood of getting it passed and not having a lot of citizen complaints about it seems unlikely. And it doesn't include anything on the expenditure reduction side. Should the gap closing plan, could the gap closing plan include expenditure reductions?
I think the purpose of the plan ultimately is to say, in worst case scenario, what is a reasonable method to fill the gap? I agree. I don't see the mayor, the administration not cutting expenditures to a certain extent. But to map it out in a plan, I don't know if it gets us anywhere.
Well, I mean, I think Senator Plus made a good point that the reason for doing this is to start thinking ahead. These things happen. And that requires some work to look at realistic things that could be done to balance a budget. And I don't think potential 70+% property tax increase involved all the real work of the way to close that budget gap. But I think it should include some thoughts, at least, on expenditure reductions.
So the problem is any major, like genuine expenditure reductions that are really going to save money in a scenario like this, like true money, are going to endanger public safety in some fashion, right? It's going to be cops stretched way too thin, closing firehouses, DPW, we abandoned the new campus, we stopped buying plows, cut overtime, so what are supposed to do, right? It'll really be genuine public safety impacts. The marginal stuff, like we could wipe out Parks Department, close all the community centers, pools, stuff like that, right? It's honestly at the margins, right? The vast bulk of city spend is on public safety items. Just the reality of it.
Probably includes benefits and salaries.
Well, those are mandated. You can't cut
Some are.
No, all of the ones they have are state mandated.
Well, the costs are the missing mandate.
No, but,
Health insurance.
well, pension is. So it'd be only health insurance would be the issue of whether or not, and again, under the Taylor law,
Right.
you have to negotiate that.
Mhm.
So, I think it's important though to point out that we are not recommending these tax increases. That the city is not recommending these tax increases at this point. but it is telling us what would have to happen if the draconian cuts happen, particularly the $40 million from the state. And that really becomes the big issue. And that gets us back to the federal government's cuts in Medicaid and in education going forward. So I think it's important to explain to the public what possible increases could happen early enough to have discussions. And I think you're right. We're not saying you should do these. We're saying here's a way of looking at the problem and what we would have to do if these worst case scenarios came forward. Of course, I think they're going to cut some kinds of services and we're going to have some kinds of reductions. But I think that this is an enlightening part of thinking through the process and being able to start to have discussions so it can say exactly what you did say, Director Keenan. Nobody's going to increase taxes 70% over 2 to 3 years, but that's how far we are behind the ball on what we've been doing over a number of years to get us back into balance and get us to a place where we don't have to do these things. So I appreciate both of your quick answers on that. Okay, Jeanette?
Thank you. And then to summarize, the city has provided a gap closing plan that addresses the amounts that were identified by BFSA. The gap plan relies heavily on increased state aid, and that speaks to your point, Secretary Claus, that I think it really demonstrates the importance of the state to commit to the 40 million of annual aid. The amount of additional state aid received will again determine the real property tax levy and how that would increase. We just discussed that, so I won't go through those amounts again. And that summarizes my comments on the gap.
Okay. Are there any more comments on Jeanette's analysis and report? No, Bryce, you can't get up. Okay. At this time, we'll consider a resolution on the financial plan taken as a whole. This draft resolution has been provided under tab 4 in your board book. The resolution declares the overall financial plan to be incomplete due to the failure of the Buffalo City School District to submit a 2027-2030 financial plan. The BFSA Act requires the BFSA to provide notice of the district's failure to submit a financial plan to the city with copies of the director and send copies to the director of the state budget, the state controller, the chair of the Assembly Ways and Means Committee, and the chair of the Senate Finance Committee. The resolution furthermore finds the independent financial plan of the city to be consistent with the BFSA Act, but continues to include significant concerns as noted in the BFSA report of May 5th, 2026, June 17th, 2026, and July 29th, 2026. Please note, a typo has been corrected in the third whereas clause. The date referenced has been corrected to May 5th as opposed to May 15th. May I have a motion to approve the resolution? Move. Second? Okay. Is there any further discussion on all of this? Seeing none, all those in favor say aye. Aye. Opposed? Okay. The resolution passes. Jim, before you leave, do you want to say anything about the financial plan and any issues?
Yeah, I wanted to stop by today without the plan, but to give you an update, knowing how important it is for your responsibilities, but also for us to get your valuable input. I did have Fred and Jeanette meet with the chair of the board's finance committee. Was that last week? The week
Last
before?
week already,
Yeah. to outline for her and to reinforce with her, the president of the board was also invited, but she couldn't attend. To outline, from their perspective, the documents and decisions that are due during the month of August, including the school closing plan, costed out, submitted to this body, and then incorporated into the 4-year plan. A final plan for the BTF and the administrators union, an expectation for that short-term extension that I talked about, rather than a full-blown negotiation, and incorporate that into the financial plan. And the capital projects expected, the next bond sale expected this September to be incorporated into a 4-year plan. I think the meeting went well, and it was very useful for the board member and for all of us to get on the same page regarding the timing of these specific items. So, what I'm here to update you on, the state ed commissioner paid a visit to the Board of Ed this morning, in response to the recent events. She had a press conference that she met with the board president, the superintendent, and some of the superintendent staff for a couple hours. And then she had a press conference. Most important is that she showed up and I think provided a very calm assessment of the issues that the board itself, the new interim superintendent, and the board as an organization charged with education of our students. The focus has got to be on opening the schools in September. And that she does have some power and the willingness to use it to address supporting changes in the board's way of behaving and in supporting the new interim superintendent. She hasn't made final decisions on those things, but she did mention in her press conference, so I don't come off like a big mouth, the potential of, what is the term they use that Rochester has?
Reminder.
She used another term besides monitor. I probably shouldn't be, but as in a support role for the superintendent. And then she also said she can look at board's behaviors and certain things that are going on there, and they have acted in the past with the board removal in Carl Palladino's case. So it was a very open discussion, but also resulting from that, she was aware of our financial condition, and she's very aware of the challenges, the planning we're doing to address those. Heavily suggested, and we followed it, that we do not release the school closing plan, which we had intended to on Friday. And then it's good, it's healthy. We need to keep the focus on rebuilding the confidence in the organization and getting ready for school in September. But she's also very aware that that's an essential component of keeping the Board of Ed's reserves above 200 million and the board in a relatively strong financial condition. So what we had discussed last week will be put off a little bit due to today's events. But as far as the plan and the costing and the numbers, I'll have done by the middle of next week. And I'll be incorporating those into the 4-year plan to submit to you by, I think, about August 15th.
Wonderful, thank you.
Okay,
Yeah.
Jim, does the commissioner have an understanding of the difference between Buffalo and Rochester, and that the city of Buffalo and the school district are under the BFSA as opposed to Rochester, where there are no implications? And has she said anything, or?
That's a great point, and she did not. And I think it would be, so I don't know if she's aware of that. She just didn't mention that today. And boy, that's an important point.
Because I think it does lead to different discussions and different implications for what's going on. director wrote, maybe, and if the board thinks it appropriate, that we send a letter to the commissioner, just pointing out how we fit into the process and what our concerns may be going forward. We're obviously already sending out a letter because of financial plan, but I think that maybe even having a discussion with her at some point. And I'm not asking all of that to be put together, but if maybe you could think through that for us as a board. Does the board believe that's an appropriate response? Does anybody believe it's not? If not, then I guess, Jeanette, we can just move forward on that.
Absolutely.
And I think the one thing there that we did discuss, at the end of June 30th, 2026, it's not completed, but we're gonna have the highest rated audit. We're gonna be considered a low risk auditee, and we're gonna have $324 million fund balance as projected. Actually, $20 million better than projected. But we also know that if we don't close schools, that fund balance is gonna go down by $60 million per year. So all our planning is being proactive. We are not in an immediate financial disaster.
No, but we've just gone through the experience of the city having millions of
I agree.
dollars of
No, but-
balance, and it's gone. We don't want the school boards to be common,
No,
because
I
what's
agree.
happened to the rating agencies' response to losing those
Yeah.
reserves, so, you know,
It's.
that
I
money
guess
can
to me,
disappear quickly.
I agree, and I've been saying it for 2 years. In this politically charged thing, I'll just be honest with you. I don't want like an overreaction as someone who isn't as familiar with our numbers and our track record as this group is, where the medicine could become worse than the, like, let's put someone in there that doesn't know anything about any of this stuff or our district. Anyway, that's all.
And Jim, I do though
Legitimate
think,
concern.
I think this board has been more concerned with unrestricted reserves than with total reserves. So that as we start to look at that smaller number and talking about a rainy day fund, and you're right, the community doesn't understand the difference between reserves, encumbered reserves, unrestricted reserves, and then our rainy day fund and our state obligations through state ed to have certain reserves in place. When we look at those unrestricted reserves, I think that's where our concern is, because we don't have more than, I think you said last time, probably 2 years before all the unrestricted reserves are gone. And I understand you don't want to have your board overreact to all of that. But I think we have to be careful, particularly if we're looking at labor contracts that are out there, that those are going to take up a large amount of your reserves to get done, I would think. And then moving forward, looking at what's happening, along with, as we just talked about with the city, the Title I and IDEA cuts coming down from the federal government. This is I think the community needs to realize this is a much bigger problem. And that it's not the school district's fault necessarily, or the city's fault. As we've walked through, these people have done the best that they can, given everything. But these changes are coming on so fast, and they're so large that it's almost impossible for anybody to pick up those things. I think the good news is that both the city and the school district have really been able to weather all of these things and come out on the other side as well as we have done, that we are resilient in a lot of ways. And I think that says something about the Western New York and the city of Buffalo's community, that we've been able to work together as much as we have. But we have to be careful to make sure that people understand what's going on, because as you say, well, why don't we raise taxes? Well, we can start to see in some of these cases, we may have cut into public safety as much as we can. We may have to look at what given our school poverty numbers and other things are, we may need to make sure that we have the kinds of supports that allow people to be supported and successful. So while I understand what you're saying, I think it's important that we realize as a community just what challenges we're facing in all of that. So, but thank you for
Jim, when you talked about the 7 school closings or the plan that you're going to be submitting to us soon, does that have the support of the majority of the school board members?
Oh, I do not know yet. We're submitting the plan to them. At the same time as I'm incorporating the cost out of those savings into the 4-year plan. So it'll move along a dual track, which we always knew it would because it's so politically charged. It's just the board won't see the details of our proposed plan now for a little bit, which is, wise. I understand the commissioners. But if we didn't have this extraordinary crisis of a superintendent resigning and another board member with outstanding allegations, you would have had the school closing plan out there, and you would have had the 4-year plan. So I guess understanding that,
Well, I mean, from our perspective, the control board, it's
Yeah.
supposed to be a report submitted to us. Capital plan timetable is not met.
I agree.
You have, decreasing fund balance over a number of years, and the concern about running out of the fund balance within a couple of years. And you don't know yet whether or not you have a board that's agreeable to making cuts that need to be made to maintain the fund balance.
I can't replicate that. That's right.
So it puts us in a tough position in the advisory role that we're in to be able to determine your fiscal stability.
Yeah, and I guess this is how, I had to go to the common council. I think it was yesterday. To help out,
Was yesterday.
to help out their understanding of the Da Vinci budget. Now, there was politics involved as to why it was called there. Some people were saying it was because the controller wouldn't refuse to sell the bond. And I went down there to say, no, the reason is the economics of both the project have changed and the economics of the school district. So you have various people at state level, city level, throwing around numbers that are not accurate to justify their position on this when it impacts our unassigned fund balance, our total fund balance. It's contrary to closing 4 to 7 schools. So I guess that's my concern. No, I think we've done a pretty good job every quarter, publishing our numbers, updating our projections, usually twice straight quarter, beating our projections, proactively identifying upcoming problems because of enrollment trends. But it's like nobody, you guys do, but other than this body, nobody really listens or reads the numbers. So I don't know why I said that, but it's getting frustrating. It's just getting frustrating, that's all.
we can understand your frustration.
Do I know that?
We can understand your frustration.
Thank God for this body. I do want to say that.
But hopefully you can bring back to the Board of Education that it's their job back. We're now 6 months away from a financial plan that was supposed to be done. And then you can't plan for the future without a financial plan. I would argue you can't actively negotiate labor contracts without a 4-year financial plan that covers the life of the contract, because all of those things need to be put together for you to be able to perform any of your jobs. And a lot of those aren't your jobs. And I understand that, Jim. So this is not an attack
I
on
don't
you.
think it that way. I don't.
But-
I don't know.
But hopefully the board knows, and hopefully they'll watch this then, where we're saying, listen, this is a major failure. This isn't a minor problem that we didn't fill out a report. This is the reason we do financial planning. And it is the major, sheets that they need to be able to do in order to be able to make any of these decisions. And that for the last 6 months, that they're making decisions without having any idea of what the financial implications of those are going forward, not just in this budget, but going forward over the next 4 years, which is why Gatsby was put together in the first place. It is critical. So I'm hoping that you can say, our board, that this is a critical thing for us. We don't want to go to the comptroller and to Ways and Means and Senate Finance and say that you haven't met your obligations. But we have to do that. And there's a real important reason for pushing you to get this done and get this done sooner rather than later.
Well, that was the reason. That was the purpose of our step one of our meeting last week with that. And then regarding we have a plan from last year. It's 12 months old. We didn't close schools, so I reported to them the impact of not closing schools on our fund balance. Every time we've deviated from published plans, I report the consequences out, either in quarterly reports or special reports. So I don't know.
Well, follow what the secretary's saying, and I'm not suggesting that we do it today, but I think the control board needs to have a discussion about what criteria would need to be met or not met to consider our position as advisory or control period. I look and I see 3 negative reports from rating agencies over the last week or two. I see a school board who doesn't have a 4-year plan, hasn't submitted it, and a board somewhat in chaos. I see a gap closing plan that would require, over 70% property tax increases in 3 years. We can't sit by idly and watch it.
Yeah.
We can do all the advising that we can, but if it's not heeded, you're going to run into situations where there's further downgrades.
All right. So give me the time frame for the updates based on events that happened this morning.
And we appreciate, Jim, we know what a hard position you're in at this point. But again, I think, if you can take that to the board, your board, what we've said here today, I think that would be.
Good. You're not, hey, I go.
I will let you know. Bye, Jim.
Okay. Now, our last city item is to review the debt study conducted by BFSA staff. Principal Analyst Link will review the facts of the study, and Executive Director Rowe will present conclusions and recommendations. Bryce, for the last time.
All right. Thank you. Good afternoon. Thank you for giving me the opportunity to address the board on this item. Back in December, staff was requested to start doing a debt study comparing peer municipalities. So I look at this as the first step. We identified 19 different communities, pulled some data points, including measures such as population, poverty rate, outstanding general obligation debt, available debt margin, and credit ratings. We pulled all the data from the municipalities' respective 22, 23, and 2024 financial documents to try and maintain a comparable fiscal period, and relying on them, the cities, and what they published. So the first slide we have first slide we have here is the list by, in alphabetical order of the 19 cities selected. 5 out of New York, Albany, Buffalo, Rochester, Troy, Syracuse, Schenectady, Pittsburgh, Milwaukee. So we have a nice blend of different cities, different populations. On this one, we kind of call it the demographic slide, identifies city population, per capita income, personal income, poverty rate, size of the city, and then the most recent credit ratings from the big three. I do want to point out, I did rely on financial statements, so there's a disconnect between what the city of Buffalo report versus what the American Community Survey does based on the census data. So I don't know if it's the methodology that was utilized or if the city of Buffalo used the Metropolitan Statistical Area, the MSA, which would include Erie County. So under that, it showed the per capita personal income in 2023 at 68,000. But when you look at ACS, they have that at 32,455, which is more reasonable, fairly speaking. So a couple quick points from that. And my intent with this study is to provide some data for discussion and see where the board would like this to go. So a couple key points from that. City of Buffalo's third highest poverty rate, 27.4%, with only Cleveland at almost 31% and Syracuse at 30% ahead of them. Based on population, City of Buffalo is ranked 7th largest between Pittsburgh and Toledo. Physical footprint, the city of Buffalo is ranked 14th in land size, so it's smaller. There's no real opportunity for outward expansion. They're landlocked, so they're not going to be absorbing Lackawanna back or any of their first-ring suburbs. City of Buffalo's credit rating is reported by the major credit agencies in the bottom third of peer cities. Other cities that were in that band include Albany, Schenectady, Syracuse, Toledo, Troy, and Milwaukee. This graph just ranks the cities on a 2024 per capita expenditures based on the general fund expenditures. With that, City of Buffalo is ranked 5th at almost $2,200 per capita, with Albany right behind them at $2,160 per capita. Per capita general obligations, City of Buffalo is ranked 12th on that calculation at $765 per capita. Albany is right there again at $755, and Buffalo is behind Spokane, Washington there. So as I mentioned, City of Buffalo is ranked 5th in 2024 for per capita expenditures at $2,200. The year before, it was ranked 7th at $1,877. Both fiscal years, City of Buffalo is approximately ranked the top 25% of cities for per capita expenditures. So really what you can distill from that is the city is the top spender when it comes to expenditures on a per capita basis, and what is driving that. As we've talked over the years, we've really seen the fringe benefits, pension, especially pension and healthcare, being the large cost drivers on that piece right there. Based on fiscal year 24 data, the City of Buffalo is ranked 12th regarding general obligations per capita. Director Floss provided a report to the Lincoln Institute Land Policy, and out of that report, I believe Buffalo is the 148th
out of 150 cities in debt. So we have the second less amount of debt per capita of the top 150 cities in the United States.
And then this metric's a little, I just have to explain it. So that 15.3% on the previous slide that I talked about there, what that is taking the outstanding debt as a percentage of the available debt margin in that year. So with that, it's saying Buffalo is using 15% of that. Going back to the other slide, you look at Cleveland, which is at 216%. So they're using twice as much, or they have twice as much as outstanding debt compared to what they can issue.
There's in Rochester at 42.4.
So
I think the Syracuse and Rochester, there's an error in the formula because the debt margins, for Syracuse and Rochester in the 20% range. You might want to just check that. The reason I know that is to represent both of them.
Mhm.
Syracuse is not 80% of the margin.
No, that's, available for that year.
Oh.
So in remaining balance. So let's say, city of Buffalo is 1.4 billion available. They have, or this 1.6, they've issued 200 million that's outstanding. So that leaves that balance of the 1.4. It was an obscure data point that I was trying to use. I pulled it from a peer review journal. I was trying to use it. Rick, I'd be happy to explain it to you, show you the map. It was just one way to look at it. It would have been better just to show, here's what the constitutional debt margin is versus what's outstanding. That would have been a cleaner snapshot. And I think that's what you're indicating there with your comment.
And I think comparing different states that have different legal requirements makes this a hard thing to sort of put together and analyze in different ways.
That's exactly where I ran into when I started reviewing all these financial statements, because every community issues debt differently. Every community has, Syracuse has the airport as part of theirs. Different functionalities like that they support with their debt. A lot more cities issue grants and bans too.
Well, and just to help you out supporting it, that's why census, when they do the finance of governance, actually talks about normalized cities, not just what the numbers in the financial plans are, that they adjust their categories so that you can start to compare apples to apples. And that sometimes confuses people when you look at numbers from census in the American Community Survey and others too.
I think the geo is so helpful.
So I guess after doing this study, one takeaway I had is, yes, every city's special in their own way, especially how they report their data. So as I mentioned before, Buffalo's one of the higher expenditures per capita, ranked 5th, $2,200 per person, ranked 12th for the general obligations at $765 a person. And for outstanding debt as a percent of available, they're ranked 15th. So to me, that indicates there is capacity there. But how is that?
Bryce, do you know what would happen if we took out state and federal support from our expenditures? I think you'd get a very different answer. So a lot of the reason our expenditures are high is because we're in New York State that has a pass through the city. I just want to make sure everybody understands that what we're looking at is it's not like Buffalo is making decisions on what to expend in some cases, that these are mandates from the state that are being expended by the state in some that as we look at all of that, we need to adjust and think that through too.
And that's when we approach this, that's why we're trying to be reliant on each municipality's financial statements and but as you go into that, you have cities of New York versus Ohio and elsewhere. So
I think that piece of that's why Rochester and Syracuse are interesting though. And different per capita.
So from a summary perspective, I'm kind of happy to hear the conversation around the table that it really is difficult to reach a summary because the data shows so many different things. So the summary, it really focuses more on, long-term financing being a very important tool to municipalities to be able to finance significant infrastructure programs without having to deplete cash reserves. That was something that CFO Jim Barnes had mentioned with the Da Vinci project, or requiring annual budgeted appropriations, which would result in tax increases, of course. So it is an important tool. Debt should be amortized over the period of benefit. Individuals benefiting from the project will contribute to the cost of the project. So it's a 30-year bond, for example. You have new residents moving into the city 10 years from now. They'll be contributing to the benefit of that asset for the next 20 years also. There's a term, intergenerational equity, for making sure those costs are spread out amongst the people who will actually benefit from that project.
Price is the $2,200 per capita number. That's out of the O&M budget, not the debt service?
Or, yeah,
It's not for debt service.
That's
not
the
for debt service.
general fund expense.
So would I be wrong in concluding from this study that City of Buffalo is a relatively high spender in the operating budget, but very under leveraged in the capital debt service?
From the ranking of, yes, yeah, I mean, I would agree with that statement.
We're spending a lot in the O&M compared to other cities, but we really haven't borrowed and addressed our infrastructure needs to
Now,
the extent the other cities have.
that is correct. And keep in mind this, that 608 that was reported this past year did include smaller pots of some of the ARPA dollars going out for projects that were not to nonprofits, but some of the in-house vehicles and a few of those in there too. So there was a little, I'd call one-time artificial increase there. That was included as well, but it is what was reported in financial statements. So I just want to make sure I was consistent when I gave.
I think what's most interesting in all of this is looking at our counterparts across the state, because we have similar mechanisms, similar poverty. So it'd be interesting to see like state aid percentage for our counterparts across the state.
We're on the high side. We get just more.
But Rochester is it's much higher per capita and so it just,
Yeah.
it'd be neat to analyze our state, because we're all under a similar mechanism. And
Just in regards to Rochester, they receive less than AIM, but they get sales tax. Yeah, thank you.
And also property tax.
but all of that together helps paint a picture of a better picture than trying to compare us to other states that have very different mechanisms.
And that's analysis we did a few years back, looking at City of Buffalo, Syracuse, Rochester, Yonkers, and Albany. Thing we repeatedly said is that for us, City of Buffalo having the second highest population in New York State, Yonkers and Rochester budget was higher than the City of Buffalo. We are actually, and I've said this to council a number of times, is we're trying to do more with less when we say cut the city. We know it's a revenue issue with the city. But we are, first, when you look at the budgets for Rochester, Albany, and City of Buffalo, the percentage of their budget that they use for public safety, around the same percentage as City of Buffalo.
Okay.
But they have their budgets is higher.
But I think the other thing that is different from a number of the cities there is, while it looks like we have a high poverty rate, where we really have a high poverty rate is with children. And part of that is a decision for us to be an immigrant community that has allowed us to grow. And that's just part of the process here, is that we have young children who are living in poverty, but we're the ones bringing them up and bringing them into the middle class over time. So I think that while it's a double-edged sword, we have to be very careful about looking at some of these numbers and breaking them down a little bit. We're also a very much younger population
Same factor, yeah.
because of the same factor. So there are a number of things that we can do and that we can put together.
With these child labor laws, the kids aren't working, so
Yeah.
obviously they're poor, you know?
Not having 10-year-olds out there. And,
Out of minds, yeah.
Okay, so in speaking about the paying for projects over the period it benefits users, this was the excerpt from the controller's estimate report dated last year, soon, a new one coming out shortly, that references the rapid amortization of debt. This was cited in the S&P credit report, the recent one, where they cite that the rapid amortization may in fact increase carrying costs for the city. And actually, they recommend that the city could borrow more than what they have been borrowing, more than 25 million a year on average. I thought that was interesting. FMP.
Well, we do have our, Comptroller will file her estimate report as of August 1st. We will take a look at this analysis of other measures. We understand that the administration would like to borrow more, take those factors into account. We'll file the report and have discussion after this file.
Next slide. Please, thank you. So as we discussed at the July 7th meeting, the GO bond sales have been fairly consistent over the last 10-year period. These numbers exclude the impact of having no bonds sold for 2025. So over the last 9-year period, I guess you could say, the average was 23.2 million annually. This amount, as adjusted for inflation, is 28 million. So the debt cap for this recent year essentially keeps spending flat from where it has been over the last 10 years. The cap has allowed for inflationary adjustment, but not for any incremental or additional investments in infrastructure. As we've discussed around this table, there are costs associated with deferring capital projects, whether it's additional repair costs that result from deferring repairs that were necessary and additional damage that happened, increased construction costs beyond just, flat inflationary increases, and of course, inflation. So a suggestion is to request a report from the city administration that reasonably estimates these additional costs to be incurred by the city resulting from delayed projects over whether it's the last 10 years or last 5 years or whatever period makes sense. I had 10 in here because that seems to be our general look back period. Next slide, please. And then importantly, any increase in GO debt has to be paid back. So the city would have to demonstrate the ability to repay any additional debt and account for that over the financial plan, but we would recommend even further than that in maintaining a long-term schedule of annual debt service payments to fully understand the longer-term impact of not only increasing GO debt, but as you continue on your infrastructure program, how that layers on top of each other over time. And just a general statement that resources for general operations of the city would be limited if additional resources to pay the debt are not identified. Excuse me. And that summarizes my comments on this study.
Is there a benchmark? I don't recall the reviews. Is there a benchmark out there for the amount of prudent capital debt as a percentage so that you're meeting your, what I mean? Is there a benchmark out there? I don't recall one of this.
There's certain ratios that provide benchmarks, such as like debt service as a percentage of revenue. Things
for
like that.
For the fact that we have so
Yeah.
level for so long, but is there?
I'm thinking Robert Morris and Associate is their government ratios along with their industry ratios. Now, they're not official government things, but they would tell you, if I believe it, it's large, medium size, and small cities. They have financial ratios for all of those. We could obviously go look
Yeah,
at those.
curious of like
That depends on your long-term planning too, right? Like, so at the county's going to very prudently knowing they have to bond for a new bill stadium at some point. Every year direct to the budget office too, I always want to see debt service going down incrementally year by year, right? Overall debt load trickling down because we knew that we did a massive issuance stadium time, right? The city situation where we're in now, the amount of deferred maintenance that DPW was finding was like truly scary stuff, right? Like they just falling apart. We're gonna have to accelerate that. That's why in the 4-year plan, I built in a pretty heavy gross and debt service initially right away for next year. That might need to be higher as DPW finds more stuff for them. So.
But to
And then
answer your-
of the concerns you list here, I'd add a fourth, I'd add liability, because all these things could lead to, litigation ultimately, right? So.
I think because of how a needs for a municipality will vary, I haven't been able to find an index to answer your question, that there's nothing you can point
So it would be in like the Moody's or S&P rating methodology.
that are
They have
set.
medians and, categories based on ratings, which
That's
kind of
right.
provides a range of different,
Oh, especially
analytical categories. So that would just be in like the S&P or Fitch or Moody's published rating methodology would be, categories related to that.
Any further discussion on our debt study? Well, I'm assuming we're going to continue to go on and all work together to try to figure this out a little bit better. I thank Bryce. Thank you for putting all this work together. I know how difficult it is to get all the numbers together, but it's a great starting point for us to start to have the discussion that we need to have. So great. Seeing none, we'll move on to Borough. Let me thank the Borough folks for having to endure all of the discussions we've had so far. We appreciate your patience with all of this. So just for everyone, the reports are under tab 5 in your board book. Borough management provided us an update and this on the report from the federal stimulus spending through June 30th. A copy of the update has been provided, as I said, in tab 5. Senior Director Watkins Young and Director of Finance Tracy Cooley are present today to discuss the item. Would you please discuss these reports on the status of federal spending with us and your plans moving forward to meet the deadlines if you can? It'd be great.
Good afternoon, everyone. Hope Young Watkins, the Senior Director for the Buffalo Urban Renewal Agency. So I've already sent the report in. You have it, right?
It is distributed.
And it's distributed in our board books.
Okay. So the report in front of us is regarding the federal stimulus funding that we've received. We have it under various categories, identified in by way of project. So there were 4 primary aspects of it. One was the project associated with 725 Humboldt, which is a city-owned property, but we were doing the project management of remediation and stabilization work, utilizing the American Rescue Funds that everyone's familiar with as ARP. So under that, we have currently obligated about 1.3 of that 1.5, about 100,000 of it is towards more administrative tasks. And there is a very minor part being actually probably going to be distributed in the next 30 to 60 days. So that will be completely dispersed and obligated very soon. Absolutely before December 31st, but we anticipate that somewhere by September of 2026, we should be pretty much clear of those funds.
And it'll be expended?
Yes. The next project was 8 Days of Hope, a wonderful organization. I hope that everyone has heard of them. They do phenomenal work, and they actually just finished their last year of this particular contract agreement. They're in with us this July. They went July 18th through the 25th. 8 Days of Hope is an organization that comes in and has been assisting with existing homeowners on major and minor repairs that they may need. They have the ability to bring in a host of volunteers and get a lot of donation. But in addition to that, some of that funding that they get was centered from the American Rescue Funds. They had a total amount of $750,000 to be spent over 5 years. That was about 150 a year to be allocated, which has been successfully done each year and produced some really great results. We've helped, I think they told me in my last count, I wrote my numbers down somewhere, but a little over 2,300 plus families have been assisted with these funds. We are at, again, this was our last year, so we did the District of South Buffalo this year with 8 Days of Hope, and that has just ended on July 25th, from 18th to the 25th. So the final dollars that remain out of that 750 currently, as it looks, is about 138,000, but all of that will be expended once those individuals provide us with the receipts and the financials that we need to support the efforts they did this year. They typically take about 2 to 3 months to get us that data, and they will submit it to the Director of Finance, Tracy Cooley. She will review and substantiate that the monitoring work has been done appropriately and the fiscal matches these supporting documents. We'll disperse the money out to them. So again, that is on target to be released well before December 31st of this year as well.
But there will be a popular target for reallocations from council members with the WIS project that's not going to come to fruition. So we let them sort of divvy up where they want to load the rest of the money they had earmarked previously in there. That's a popular one, is the 8 Days of Hope.
Very excited. They really are able to help a lot of the community, especially low to moderate area neighborhoods that are really suffering and cannot get that work done financially under any means. This group is able to come in and really make some change in those neighborhoods successfully. So continuing to support them is a great effort, and I was pleased to hear that the council wanted to. The other funding opportunity under the federal money was through a program we call Home ARP. So we have a home investment partnership program. Typically, this one was funded through the American Rescue Plan funds. The total of that amount was 12.2 million, a little over, touch over that. We've obligated a little over 3.6, almost 3.7 to some projects that are currently active. Many people may recognize Salvation Army's Hope on Main Street, very popular situation that is occurring, and we are one of the backers or assistees in that, using that funding. We do anticipate being able to move more of this. We have some other projects coming through the hopper. However, this money has a little bit longer to be expended. So it is not actually scheduled to be fully released until September 30th of 2030. So we are actively moving it, and we don't see any problems with it continuing to go forward at this time.
Well, what we've noticed with other ARPA funding is that when community organizations and others have been awarded these grants, that it has been under no fault of their own. They don't understand the procedures and ways that they need to report this to make sure that they're reimbursed and that the money's spent in a timely fashion. It sounds like you have a program that works to do that. And I want to thank you for that, but it would be great to help the rest of us figure out how you did that so that others that need to know that in the future would be able to get the money out on time too.
So I will say this in true transparency. I joined Bureau in 2022, so about 4 years ago. What Bureau has in its arsenal is a great deal of expertise with the individuals and the team that I work with. And they have done an awesome job at becoming experts in the niche of what we do, right? So project management, compliance and contract management, and being able to really stay on task. We are very good with I call it the think tank and the do tank. They're making the do tank happen and then monitoring and staying on top of it. So this team as a whole has just come together. We utilize the same process and just put it into play with no matter what project appears before us. So that has successfully worked. When the city was able to release our funds to us, we are able to get it out the door, to contract and get it out the door through that process. But we'd love to talk more about how we can help.
We appreciate it. Ben, I think we've got a good group of folks here that after everything else we've heard and a number of things, it's great to hear a positive story.
Tracy's even been helping with other projects across budget. So
it really is. We really appreciate what you're doing and how you're doing it. it's good to hear a good story.
Good to be a good
Sometimes we
story.
don't hear,
Good to be
sometimes
a
we
good
don't
story.
hear enough of the good stories.
Sometimes I don't think we get to tell our good story often, so I appreciate the opportunity to say it. This is actually one of the positives.
That's great. Anyone else have any? Well, thank you. And again, thank you for waiting so long through everything. You could, here, do you have anything else you'd like
So
to share? with us?
Tracy wants me to make sure I acknowledge that the last of those federal stimulus were sent to us through what we call CDBG CD funds. So the COVID funds that came, we received about 11.4 million. And we've actually probably released a little, close to 10.8, 10.7 million of it. The rest of it we expect to be exercised in a very short period of time. Again, we have enough programs and processes in place to utilize this money in a very effective and streamlined way. So when given the opportunity, we can move it forward.
Does you have any other good news you want to share?
I don't think I could beat Hope out with that. No, I'm a supporting cast member, supporting the staff.
Right. Instantly carrying me everywhere I go. She's supporting the cast member. Yeah.
We just do very well, like Hope mentioned, at the compliance, the monitoring piece, and
Right.
and that's the piece that's really needed to manage grants, right?
Right.
The administration, you have the project managers and the people who pull off what's going on outside, but watching over and helping people understand the reimbursement process and the required backup that's needed in that technical assistance, we do that very well.
And
So I
again,
think
we
that's-
appreciate that. And I think people don't realize how complex this can be. And to have someone like yourselves working on this has been really good to hear. So thank you.
Thank you.
Just missed the whole thing. That's great. Well, thank you very much for
Thank you so
coming.
much for having us.
This concludes the business portion of our meeting of the agenda. Is there any new business from any of the directors? Seeing none, I'd now like to open the floor to the public to comment on any items we've discussed today. Is there anybody here or on? Seeing nobody, then this concludes the meeting of the Buffalo Fiscal Stability Authority. Can I have a motion to adjourn? So much. Second. All those in favor say aye.
Aye.
Aye. We are adjourned. Thank you, everybody.